In today's video, we're diving into one of the most popular charting techniques used by traders around the world, the Heikin Ashi strategy. Whether you're new to trading or looking to refine your skills, this method can give you a clear edge in understanding market trends. So, let's get started. First, let's talk about Heikin Ashi. Heikin Ashi, meaning average bar in Japanese, is a type of candlestick chart that smooths out price data to help identify trends more clearly. Unlike traditional candlesticks, Heikin Ashi charts are designed to filter out market noise, allowing you to see the overall market direction more easily. As you can see in this comparison, traditional candlesticks show you the open, high, low, and close prices for a given time period. But Heikin Ashi candles are calculated differently, which gives a smoother, more consistent picture of market movement. Now, let's break down how Heikin Ashi candles are calculated. There are 4 key components to each Heikin Ashi candle. For open, this is the average of the previous Heikin Ashi candle open and close. For close, this is the average price for the current period. For high, this is the highest value of the current period's high, open, or close. For low, this is the lowest value of the current period's low, open, or close. So, now that you know how Heikin Ashi candles are calculated, let's talk about how to use them in trading. This is how you insert the Heikin Ashi chart in the trading view. Heikin Ashi charts are particularly useful for identifying trends and filtering out noise, which is perfect for traders who want to avoid false signals. There are a few key patterns to look for when trading with Heikin Ashi. This is a bullish trend. A bullish trend is indicated when the candles are mostly filled with no lower shadow or just a tiny one. This shows that buyers are in control, and the market is trending up. This is a bearish trend. A bearish trend is shown by mostly red candles with no upper shadow or a very small one. This indicates that sellers are in control, and the market is trending down. This is consolidation. If you see candles with both upper and lower shadows or small bodies, it might signal a consolidation phase where the market is undecided. Let's jump into a practical example. Suppose we're looking at a Heikin Ashi chart of the gold and USD pair. We've been seeing consistent green candles with very small lower shadows, indicating a strong bullish trend. At this point, we could enter a buy position, as the market is showing clear upward momentum. We could wait for a pullback to enter our trade as shown in the chart. Let's say we enter at this point when a small red candle with no lower shadow appears, and then when the red candles start showing up, we decide to exit the trade for a profit which might signal the end of the bullish run and the beginning of a bearish trend. This is how Heikin Ashi helps you smooth out the noise and focus on the bigger trend. Before we wrap up, here are a few quick tips to help you use Heikin Ashi effectively. Tips number 1. Confirm with other indicators. While Heikin Ashi is great for spotting trends, it's always good to confirm with other indicators like moving averages or the RSI for better accuracy. Tips number 2. Use proper risk management. Even the best strategies can have losing trades, so make sure to set stop-loss orders to protect your capital. Tips number 3. Practice on a demo account. If you're new to Heikin Ashi, test out the strategy on a demo account first to get a feel for how it works. That's it for today's video on the Heikin Ashi trading strategy. Remember, it's all about identifying the trend and making informed decisions based on that trend.